part of the reason I want to work with Bitcoin companies, or wanted to, and got into this space, was they're the only times I have discussions about like 20, 30, 40 years in the future that are like positive, hopeful, and where people are looking to build something. Mental health wise, I found it so much better. The volatility is easy to deal with for the positivity that you get out of just the discussions and being around people who are actually like building with hope for the future.
Bitcoin is a currency on the internet.
If you don't trust any other currency, this is where you go.
It's going to outperform everything.
Bitcoin could eventually be worthless.
Every day is a good day to buy Bitcoin.
Bitcoin reached its highest price to date.
Bitcoin hitting a new high. It really has reached escape velocity.
There is no second best.
Who cares about Bitcoin?
It's the only secure database that's ever been invented.
Antisocial.
Bitcoin is the real deal.
Stupid.
Everything is bullish for Bitcoin.
Immoral.
It's going up forever, Laura.
Fix the money, fix the world.
WaterWork is a registered investment advisor, and the opinions expressed on the show are their own and do not reflect the opinions of the Silica LLC. Joining us as a CPA, and the opinions expressed on the show are their own and do not reflect the opinions of trusted CPA or other affiliated firms. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Any statements or opinions are subject to change without notice.
Welcome to the Bitcoin for Financial Services podcast, the show where sound money meets professional services. We explore how to build the financial services industry within the principles, ethos, and values of Bitcoin. And today we have on the CFO from Block Rewards, Travis MacDonald. All right, let's get into the episode. All righty, welcome back to another episode of the Bitcoin for Financial Services podcast. Today, I'm super excited. We've got Travis from Block Rewards, and honestly wears several different hats. I've been very blessed to know Travis, I guess, I don't know, since sometime last year in 2025. But, you know, I think that there's more than meets the eye with Travis. And so I'm actually very excited to learn a lot of things today myself. So Travis, thanks for joining us on the first day back, I guess, from the New Year break.
Yeah, when you said, yeah, great to be here, man. Thanks for having me. And yeah, when it took me a second there when you said last year, 2025. I was like, wait, instead last year I went 2024. Like, yeah, it's January 2nd, so you know that's you're still making the mistake when you write the year, sort of thing.
Yes,
great to be here, man.
Yeah, I mean, so I'm excited because I keep hearing about Block Rewards, the company, and so I'm excited to hear more about that. And then I think we initially met, I guess, just in a Bitcoiner accountants Telegram group through that, and so yeah, looking forward to this. I think that you've got a ton of valuable just background and knowledge to share with this space, and kind of one of the core principles of this podcast is trying to bring Bitcoin into, you know, kind of the big boys table. And yeah, the more I hear about your background, it's like, okay, you're playing a big role in that piece. So why don't you give us a background of like what you used to get into before you were in Bitcoin? I think that's an important kind of framework to start. And then I'm very excited to kind of hear once you made that switch from more traditional finance world and into the Bitcoin world and what you've been up to since.
Yeah, sure thing, man. And yeah, I think that's an important, I mean, that's part of the interesting aspect of, I think, this podcast and just the discussions you're having is seeing that transition as people move from the TradFi industries and start utilizing Bitcoin. I know myself, it took about 10 years. I first heard about it in 2011. I went to Waterloo, went to math and accounting at Waterloo in my master's of accounting year, 2011. I heard about Bitcoin. You know, it was already past CPU mining. It was into the GPUs. I had no idea what I was doing technically. I couldn't even like open the ports to figure out how to set up properly. And I just noped out at that point and was like, okay, cool, you know, kind of dismissed it. Saw it again in 2017, 18, when a guy at the firm I was working at, which I'll kind of get into in a sec. He was investing in Hut 8 and working at an accounting firm at the time. Everyone kind of dismissed it, and then so I again ignored it. And then in 2021, had a friend who deals with some black market stuff, and he was still using Bitcoin. And I went, oh, like I thought they would have shut it down because of this Silk Road thing I heard about. I thought all of these, FUD reasons were why it would have disappeared, and it's still around. So I found I had to look at it then. But like I said, I was at an accounting firm. So my background, I've got my CPA. I got that in 13 or so, graduated 2011, did my time in audit, immediately noped out of audit and went into the transactions group. So that was focused on valuations, mergers and acquisitions, and due diligence. This was all at Grant Thornton. So largely kind of private company focused. Got my CFA and my CBV, which is Chartered Business Valuator, as part of that group. And then essentially left the accounting world, or left public practice around 2021, which happened to be just as I mentioned, as I found Bitcoin. And so I was looking to get out of the public accounting because I found just the partnership model and the approach to the business didn't work for me. I got out of there and started looking at fractional CFO work because I really wanted to help businesses, especially as they prepped for M&A and exits. And I saw a lot of this working in mergers and acquisitions for private companies, helping them sell, as well as helping businesses value themselves as they were going through different, tax or restructuring processes. And it became clear to me that just so many businesses weren't preparing properly for that process. And there was a lot of kind of money left on the table by owners by just not really taking a look at their internal processes and how to best prepare for a sale. So I got into the fractional CFO work that way. And then, like I said, that was right around the same time as I found Bitcoin. So like kind of I bought my first Bitcoin May 2021, left the firm in June 2021, started working on the fractional CFO stuff. And as I did the required 40 hours a week of Bitcoin podcasts, I was just like, wait, this makes so much sense. Like, why aren't more businesses using this? And really started to get into trying to understand how to make it part of the financial framework for any company. Realizing that a lot of the fiat companies I was dealing with weren't necessarily there yet, and that there was still a gap there. So that's where I started really trying to work and find companies in the Bitcoin space to work with, because I was like, they're already there, and then I can learn more with them. And that's got connected to Scott Deedles, who's the co-founder here, because he had written a book, Bitcoin for Financial Advisors. He comes from kind of the health benefits space and was very much focused on how Bitcoin would start to make its way in for, advisors in business and into the financial.
I didn't know that about Scott, actually. That's really cool context.
I think we've got it here, actually. Yeah. It's not a huge one. Again, it's not that,
well, advisors are busy, and so honestly, that's probably the right length of book.
It is, and I think it really makes the case that just I think similar to was it your last episode or 2 episodes ago, where it was the fiduciary duty to almost start looking into it and at least understand it. And I think, like, you have seen that is just in the TradFi industry, we've gone from mentioning Bitcoin is a career risk factor to now not knowing about Bitcoin, not being able to speak to it is more the risk. So I think it was kind of part of that. So anyway, we got connected, and then when Block Rewards hit a point where they were needing the financial modeling and more of the CFO and accounting service, they reached out to me, and I got involved that way. And then it very quickly became, this isn't a fractional role, this is a full-time thing, and I came on board full-time. So
okay. So before that, so you got, when you say you left the firm and you got into fractional CFO work, were you taking on a handful of clients at that time, and then Block Rewards ended up being one of those, and then you went full time with them?
Essentially, yeah. I was working with there's a number of kind of companies who are offering the fractional CFO and a number of other fractional services around that. So I had engaged with one of those, was working with them on a couple clients. They were very much the fiat focus and stuff, and that's where I was looking for, Bitcoin opportunities outside of that as well. And as the Block Rewards stuff came up and started taking more of my time, I, have essentially just shifted off and decreased the time with the fiat involvement and those sort of companies. So
Okay.
it's essentially, like I said, I realized I wanted to deal with Bitcoin, and I was actually trying to find ways to discuss it with some of those fiat companies, and it was very much the like, no, what is this craziness? We're not looking to hear about this. And again, I was providing that service through a third party, who acted as the middleman, managed the BD, managed a bunch of the resourcing and stuff. And so that also, became a thing of I can't, just bring this in unless I go through them and convince them that, here's how we can use Bitcoin. So it became more of a, these are the ones I was looking for,
Yeah.
work with on my own. And again, the Block Rewards, just the growth path that we've been on and where we're at, I think, on kind of employee incentives and businesses and employers actually being able to use Bitcoin. Kind of there's a lot of opportunity there, and kind of it was the right time to really focus on that.
Your wealth deserves intention. Basilic Financial is a Bitcoin-focused wealth management firm built to help our clients find balance between money and meaning. We integrate sound money strategies across 4 distinct personalized services: financial planning, individual wealth management, retirement services for SMBs, and Bitcoin financial services. Your prosperity, your purpose, intentionally guided at Basilic Financial. Visit our website at basilic.io to schedule a free consultation.
Well, I love what Block Rewards is up to, and had a call with Scott, I don't know, a month or two ago. I mean, as our firm has grown, and you try to build any business these days, as much as you want to try to automate things and all of that, you still need very high quality people. And I think one of the hardest parts about attracting high quality people and highly talented people, that's one thing, is attracting them in, but also keeping them over a long, stay at a company these days is almost unheard of. And so I want to ask you, I guess, first, how do you see that? Like, obviously it's top of mind for every business leader, is building a core team and continuing to build out the team of employees that help support the entire business. I guess, what did you see the incentive structure being pre-Bitcoin? And then what was the compelling case that was made through Block Rewards that can, kind of flip that on its head and help the employers that you all work with now, essentially extend out the lifespan of a client or of an employee with a company that you guys are working with?
Yeah. So I guess, like, where we've been and really pre-Bitcoin, right? Like it all comes down to, I think, something that a lot of Bitcoiners will be familiar with is just like the concept that the monetary system is, broken. When you look at like wages, real wages, over time, especially when compared to, anything like housing and that sort of stuff, it's just fallen behind. Um, we've generally just, you know, had it where people are not getting paid in good money. They're not able to save. They're forced investors. It's just kind of a compounding of that system. So I think Bitcoin really, what it does is, just by fixing the money, if you're compensating people in a money that actually holds its value, one, you're paying them in something better. Now, I think there are a couple aspects to this, maybe just to to step back for a second, is like, I think eventually all, Bitcoin, all payroll goes to Bitcoin. Everyone's getting paid in Bitcoin, spending Bitcoin. That's kind of the, way down the road. But there's a lot of transition period to get there. And, that also fundamentally is a different conversation if you're talking someone with disposable income versus not. But what I think Bitcoin's doing is, and what we're doing with it at Block Rewards, is really trying to use it to build tools and incorporate it into tools that employers can use to improve the compensation that they're offering their employees. So that takes a couple forms in terms of, you can create stuff that creates a longer term incentive and really similar to like stock option plans and that sort of stuff, where you're using Bitcoin to reward someone and tie them to the company for a longer period. And so, they're incentivized to stay with you. There's an actual tangible, real cost to them if they leave, because they lose some of that longer term incentive. And there's also ways that I think right now, you see employers using a lot of tools to drive short-term outcomes as well, right? Like the retention is a long-term outcome. You want to do that because it keeps the institutional knowledge in your business. It keeps the person around who, presumably, if they're a good employee, again, assuming that you're doing your hiring right and bringing in a good person. If you're bringing in a bad person, maybe you want to get them to go. But if you're bringing in good people, you want them to stick around. You want to retain that institutional knowledge. And there's, a significant cost to replacing them. So you want to avoid that. So that's kind of the long-term aspect. In the short term, though, and, medium to long, you want to also drive the behaviors that you want within your business. You want your employees, operating in an efficient manner. You want them doing the actions that are going to result in the outcomes that you want. And I think Bitcoin offers ways to also improve that. And that's one of the things we're looking at, is essentially micro incentives paid in sats that are more real time. And this is really looking at the fact that right now, if you want to drive a specific behavior within your business, whether it's someone, clocking in on time or showing up early, or, hitting a certain metric in terms of number of calls that day, there are systems that do that, but they're all, points based, and then you have to save up your points and exchange them for a gift card. And there's generally a delay between the action and the incentive that they get. I think I was reading a thing recently on this, especially with regard to like referral bonuses, where they're like paid out, someone paid out bonuses 6 months, or basically like it from the time of the referral to the time of the bonus, it was 8 months. And employees had to remember to go back and claim it. And it was just like, so it didn't drive, they noticed the referrals dropping because they were like, well, people don't actually associate the reward with this. That time difference discounts the value in their mind. And so therefore it doesn't actually drive the action. And so with Bitcoin, Lightning, Cashew, all the layers getting built on top, especially that allow for more of the instant settlement, there's opportunities to really create tools that can drive behaviors and incentivize behaviors in the short term, as well as the tools to drive retention over the long term. And then all of that is, if you're paying people in Bitcoin and, assuming they're able to save some portion of that, well, if that appreciates over time, as we all here expect it to, then you're increasing their actual real compensation in terms of dollars. And, especially for someone who maybe previously wasn't able to save, but now they're able to save, a small portion in Bitcoin, because that's just what they're getting on top of what they, their paycheck to paycheck that they're running. Now they're able to save a small portion, and that actually creates, a bit of a safety net for them over time, which means they're less stressed, which means hopefully they're showing up better at work, and kind of creates the benefits that way. So just some of the HSA stuff and all of that, right? Like it's all the connected health aspect at that point.
So is Block Rewards, would it replace a Gusto or an ADP for a client, or is it more on the benefits side that plugs into the overall payroll software?
So we don't currently replace those. We have had discussions and are looking at what does payroll on Bitcoin look like and what does net pay and all of that look like. But I kind of just leave it if we've had discussions around that. I won't comment specifically on kind of what the opportunities are, or
Yeah.
anything that's coming there. But stay
Stay
tuned
tuned.
on all of those fronts. We're continuing to discuss these things.
Yeah.
Um,
Yeah.
but to your point, is I do think ultimately that this is actually it's one of the interesting discussions that has come up is where does Bitcoin, or where does payroll itself go? And if you think about it, like right now, payroll generally is an employee loaning their labor to their employer for, a 2-week period and then being paid at the end of it. Bitcoin theoretically enables, I mean, I can stream sats for listening to the podcast, right? Why can't I be streamed sats while I'm at the office? So like theoretically we could move to more real-time pay. And you see this, you see this to a certain extent already with some fiat products that are out there that are borderline predatory, but like you already see this, the demand for instant pay, and I think that I don't know that we're ready for that yet because people haven't practiced and aren't trained to save because again of the fiat system. And so if you receive all of your money up front and don't save enough to make sure you can, pay rent, then, suddenly it's an issue. But I mean, this could get really interesting. Who knows where we're at 50 years from now? Maybe I'm being paid as I'm at the office working, and I'm streaming sats to Netflix and my landlord and whoever I've got my monthly subscriptions and other stuff with. And like I think it will change how we generally interact like that. Payroll is one of them where again you could stream the sats. So anyway, like I said, lots of interesting discussions here.
Yeah. Yeah.
Keep an eye out for shifts in that industry, I think, overall.
100%. I mean, I think that that's honestly one of the last frontiers of Bitcoin really blossoming is in the payments rail between employer and employee. So I'm glad to hear that that you guys are at least you're thinking about that. So that's really cool. Talk me through, I'm an employer. I want to introduce this because I was even on a call, I think it was last week, with more of a traditional benefits company that was pitching a business owner on starting a 401k plan for I think about 50 employees. And even in that sense, there was like a financial advisor who was on the call who was like, oh, well, we'll come and educate your employees on all these things about how they should invest and how this is a big value add for them as an employee. How is Block Rewards, I guess, thinking about, because you have to do kind of like twice the education, right? It's not only, hey, here's why this is a benefit, whether, it's health benefits or retirement benefits, but you also have to educate on like, what is this underlying asset that you're actually getting paid in. Talk me through that, because I know that you've been anyone who's been in the Bitcoin space long enough, it's hard enough to even educate anyone, let alone a group of employees that might just not be something that they're thinking about a lot. So I'm curious how you guys are approaching the education piece.
Yeah, so that is an aspect of what we're building out. Certainly, is a learning management kind of section of the app. So we're building an app that should be launched in the U.S. Probably late this year. That is the idea. Part of that will be a learning management system that has videos and has content to teach people about Bitcoin. Like I said, we're dealing with various micro incentive stuff. So there will be, ways to drive people to go through that content and consume it.
Okay, nice.
And so that's kind of for educating them. And then the other part of it is, with more and more companies putting Bitcoin on the balance sheet with that stuff, we're really trying to make sure we're targeting companies where the senior management and where there's already some of it instilled at least as an understanding at the upper levels, and where they might be looking to make it more a part of the culture, which then that's that tone from the top. Just if your management is saying, hey, yes, this is something we're implementing, we think you should get it, or, we're at least offering it to you, we think you should learn about it, that, that makes it a more welcoming environment from like the employees being willing to learn and feeling like this is something that, um, an authority figure in their, boss or boss's boss or the CEO or whoever is
Yeah.
championing it, is kind of giving them the okay that like, yes, this isn't a scam. You're not, this isn't FTX, this isn't like any of that stuff.
Right.
So yeah.
No, that's good. So I guess honestly, it leads right into, yeah, in order to pay employees with Bitcoin, presumably the business has to hold the asset on the balance sheet. If
Actually,
2025 was, oh no, then no, they don't.
so that's who we're finding, like from a like where they're at with it. There's that's the easiest person to talk to, is that senior manager who already gets Bitcoin, who wants their employees to get it, that sort of thing.
Okay.
But we've made the product really focused, and what we're still designing is really focused on making it accessible to everyone. So even companies that don't have Bitcoin on the balance sheet or aren't using it in the business yet could still do this and have their employees hold some Bitcoin on this platform and still use it for their compensation without necessarily having to buy it themselves and worry about the account
Nice.
for it, or gains or anything like that. Now, that's, depending on the product, and like some of the longer term incentive stuff might require them to actually hold it, but that's built into kind of how the product is designed. Whereas if it's kind of Bitcoin payroll or into what we call our Bitcoin savings plan, which is kind of the 401k like product, where it's just every paycheck you're taking a portion of your of your net pay, using it to buy Bitcoin, and the employer has the option to match a portion of that. It's a taxable benefit because, the government hasn't recognized this as a register. This isn't an actual registered account. But that version of it, they can just do with fiat flows, and then the employee receives Bitcoin, but the employer doesn't have to kind of worry themselves and get delve into that accounting headache if they don't want to yet.
No, that's awesome. So you're saying an employee that just wants to get paid in Bitcoin or some of their benefit coming in Bitcoin, the upper echelons of the company doesn't even have to be bought in. They just have to, I guess, sign up with block rewards to be set up, and then it can flow that way. That's awesome. Yeah. Okay. I love that, because I think, trying to make that barrier to entry for anyone, be it an employer, any kind of corporation, any kind of individual, have it be as small as possible is awesome. If you're a financial professional working with Bitcoin, you know the pain of messy CSVs, broken cost basis, and accounting tools that were never built for this asset. Bitmint fixes that. Bitmint is the Bitcoin native accounting platform built for CPAs, bookkeepers, advisors, miners, and serious Bitcoin investors. You get clean Bitcoin bank statements, reliable cost basis tracking, full reporting, and fiat integration through Plaid. No crypto talk, no workarounds, just proper accounting for the hardest money on earth. Create a free account or book a demo at bitmint.co today. Well, I guess going into Bitcoin with corporations, I mean, it was such a hot topic. I was just, of course, I look like a golfer. I just came from playing golf. And the guy I was playing golf with, true accountant, January 2nd, got to do it. So, But we were talking about how this year, or this past year, I should say, was, all of the buzz was about Bitcoin for corporations, Bitcoin on balance sheets of corporations. And man, it's in so many ways, it was like, it seemed like another stain kind of on our shirt of like on Bitcoin's journey. And so I'm curious, I don't know if I saw you in New York at the Bitcoin for corporations or not. No, it was
No,
well, I know that one was in Orlando, but there was another
I
one
was
that
gonna
was
say
in New York.
Scott was at the Florida one, I think, but I wasn't able. I didn't make it out to those. I also didn't even make it to the
The big one.
space in
Oh,
October
I
again.
know.
That one, because it was the same weekend as the Canadian Bitcoin conference.
I know. We had our overlap, and honestly, I did not even. Yeah, that's kind of on us. So I'll take the heat on that one.
Oh, I mean, dude, there's so many conferences. You can't. I don't think you can schedule a conference without
I
conflicting with
know.
another conference at this point. Like, it's not
Well,
possible.
it's just funny though. There's so many strong Bitcoiners who are Canadian. So we definitely we're going to make sure we don't overlap this coming year. But I guess all that.
I personally appreciate it.
Okay, yeah, yeah.
Yeah.
All of those conferences though, be it the one in Orlando that Saylor put on, but then there was another one that like Ed Julian put on in New York, that would have been I think in October, November, that were just they was so heavy on this whole like lever up, put Bitcoin in the balance sheet. And obviously, there's just some of them that completely fell apart. And I'm just curious, as someone from your seat that's like, hey, we're trying to educate business owners and convince board of directors to like take interest in this. I don't know, is there any way that you think that it could have gone different with how it was handled in 2025, be it with corporations adding Bitcoin to the balance sheet?
Yeah, and I'm just I'll stop me if I start ranting too much, but it's a personal
Very good.
pet peeve of mine, the whole Bitcoin Treasury company. Like I think it's a misnomer that people are kind of throwing everything into one bucket and not really looking properly at it. And in that sense, because they're all just painted with the same brush and everything's like it's a very oversimplified view, and then you have some of them perform poorly and people aren't really understanding what they're buying. And in that sense, I think you're right. Like it really was kind of it was a net negative almost, I'd say, for kind of really beyond, micro strategy, meta planet, maybe there's, maybe similar or something like that. But I think where it comes from is just, again, it's a misunderstanding and oversimplification of the industry. There's profitable companies using Bitcoin as a savings vehicle, which is really just the recapitalization of the balance sheet. I think Lynn Alden had a great article on that, that was just speaking about how in the low interest rate environment that we've had, and with everyone doing share buy, like it's just become give the money back to shareholders, lever up the balance sheet, don't hold a significant amount of actual capital because that's not yielding a real return. Bitcoin allows the recapitalization of the balance sheet and for profitable companies to actually save, and that's just using Bitcoin as part of your capital stack and your long-term planning, and actually having a savings vehicle, just like for any individual. Then you've got the capital arbitragers and, potential future Bitcoin banks, which is like MSTR, who like they're arbitraging on just, the general capital market's ability to access Bitcoin's returns. And so they're structuring different products to give different things to different parts of the market to generate investment interest from that and then turn around and buy Bitcoin with it. Maybe that becomes a Bitcoin bank thing. I think that's a whole other, like, what does that look like? But that's, just essentially making money and arbitraging the shift from from fiat to Bitcoin over time. So I think that also has to morph as that transition happens, which is where I say maybe those are the Bitcoin banks, whatever that is. Then you've got the Bitcoin investment companies that are like actually investing in the ecosystem using Bitcoin as a hurdle rate. That's kind of just a Bitcoin, that's essentially a hedge fund or investment fund that is using Bitcoin as its or denominating in Bitcoin, right, rather than fiat. So, are you earning a return in Bitcoin terms? And then you've got the meme companies who are just riding the hype. But like those are the four, like there are four categories there. There is not one Bitcoin Treasury company. There are four different ways that people have put Bitcoin on the balance sheet and are using it as part of their treasury. But like it's a vast oversimplification to just paint them all with one brush. And then because doing that, people aren't understanding the differences between them, which then leads to like expectations gaps and where they fail to live up to the hype. And then, I mean, some of them have, I think, also just been like, it's been an excuse to pump. It seems a little too pump and dumpy. It seems a little too, I'm an influencer. Let me put some money into this and use my name. It feels very shitcoiny in that sense to me. So, I like people actually defining what their business is, saying here's how we're using Bitcoin, and being like very clear about how it fits into that structure. And I feel like it's very much been used as just a hype word. Bitcoin Treasury company, pump the stock and try to make money off it. So seems like more fiat.
Yeah, no, absolutely. I mean, so when you are like sitting in with client from the CFO role or outsource CFO role, how are you, and maybe let's start with one of these big, like a company that's already, Bitcoin focused. Maybe that's part of their customer base. Maybe they're earning some in Bitcoin. Maybe they're mining. I guess how are you helping them think through how to manage the Bitcoin on the balance sheet? I mean, and maybe we just focus on mining or whatever direction you want to go. But it's one of those things where, sometimes you're just accumulating, sometimes you're accumulating and you're needing to sell. Are you all dealing with that much from your role right now, or any thoughts on that?
So Block Rewards itself is still in the startup phase. So again, like it's very different, I think, depending on the stage you're at. If you're a profitable company saving in Bitcoin, looking at it as part of your capital stack, then I think you're looking at, and I think actually, really, this is true for anyone. It's what are your short-term needs? What are those denominated in? Sorry, if I can speak. And then what are the assets you're using to cover those, and making sure that you're not having, potential mismatch there where the short-term volatility in Bitcoin means you're unable to, meet your immediate liabilities. So I think like viewing it as part of working capital, if you've got bills you can pay in Bitcoin, even that's where you're still subject. If you're paying them in Bitcoin, but they're denominated in the fiat currency, then it's really the fiat currency that you're having to worry about, because that's, the value you're having to pay. So I think from that perspective, the working capital management is one thing. The long-term capital management is another. If you're using it as part of planning long-term projects and just your overall capital stack, then, it depends how you're able to use it. If you can look at selling it off as you need to shift, the level of risk and your exposure to that volatility. You're starting to see the Bitcoin backed loans, and like maybe it starts to become part of some asset backed lending stuff, where you've got it as part of the collateral you're putting up, and that can change the rates. So I think this is also something that, if you're using it in the short term versus using it as part of a like 5 or 10 year capital planning project, that can look a bit different. You've also seen so many derivatives come in, especially on the mining side, right? Like this is one that anyone in that space, I think, needs to be looking at what are the hash rate and other derivatives out there that I can use to help, plan and make my business more efficient. So I think it's just, it's still early stages. And I would say I don't know that I've got like here's the way it should be used, but it should be part of that discussion of, view it as another currency, view it as highly volatile, but what do we have our assets and liabilities denominated in, and where does it make sense as part of that stack? I know at Block Rewards, one of the things we've done with it is actually used it as part of trying to drive our raise. So and I think this is one of those things of like anyone looking at raising money and in this space especially can look at how can I use this to again make something that works for investors and works for the company. And so part of what we've done is we have a debenture that's offered that's a convertible debenture that a portion of that when on funding, a set percentage of that of the funding that comes in is used to buy Bitcoin, which is then held in a wallet with a custodian that's verifiable. Like you can view it on chain. It's a cold wallet. It is with a custodian, and part of the reason for that is that in the debenture agreement, if the investor goes to that custodian with documentation of an event of default, they are able to claim that Bitcoin as security directly from the custodian. And so what that's done is we've got a convertible debenture out there that converts at a valuation that we might not be able to validate today, but in 3 years at the end of the debenture, we expect to be a fairly conservative valuation. But it defers the actual decision for the investor on whether to invest at that value until later. In the meantime, it gives them an instrument that is producing, we've got a cash or a PIK option as far as how they want their interest paid. So they can either be, getting a portion of their capital back, or they can be, receiving additional equity as they go, but then making that final decision on do they want to convert or do they want their cash back at the end of the term. And in the meantime, they've got the partial Bitcoin security there, which as Bitcoin appreciates means their loan is actually increasing with the amount of security over the term of it. So it lets them be, very confident that they'll at least receive the fiat denominated principal back along with whatever their interest payments are over the course of the term. And then, also means they don't have to fully buy into the valuation that we're discussing today. It's a future valuation. So it also removes some of the kind of need for due diligence and really digging in on that valuation today, because it's a future valuation that by the time we get there, we should have more than validated. And so then they're able to convert at essentially a discount at that point. But relative to today's value, it's actually less dilutive than offering equity for us. So works great for them and works great for us. And so again, I think this is where we're in this transition period from strictly fiat to strictly Bitcoin. In that transition period, you can use both tools in ways to kind of create these products that wouldn't work under, 100% either. Like if you're purely fiat, this doesn't work. If you're purely Bitcoin, this doesn't necessarily work. It's this transition period. There's a lot of opportunity there.
Yeah. Well, and I've spoken with founders. Now you kind of have to time it, but I've spoken with some folks that Bitcoin helped extend their runway by quite a bit. And so that's one very interesting thing to consider. But then, it can very easily say, well, maybe it shrinkens or, compresses your runway as well, right? So
yeah, it definitely can. It cuts, the volatility can cut both ways. That's part of where, and you're right, this would apply on this product as well. We've issued it with a 3-year term, and we're with the investors we're talking to, we're expecting that over these 3 years, Bitcoin will appreciate. If you were doing this, right at a market top where people were expecting it to decline, maybe that's a different discussion. But also, at market tops, people generally aren't thinking it's going to pull back. They're just FOMOing in. So, it's actually could be work really well as a sell there, their expectations, but you're right. It is, you have to look at the timing on any of these. But again, if you're looking at the timing and you're understanding who you're talking to, who your universe of investors is, at that point, it's how do we construct this in a way that works for them, right? Like we've set it up with the interest rates we've set it up with, and the security percentage we've set it up with. You can look at, do you have a call option on there such that you can do an early redemption, like call and put options for early redemption from either side. You could look at, under what terms, what is considered a default, or what allows them to claim the security. You could even look at doing that in partial terms or something like that. Like you could really get into kind of fine tuning this to work for the company as well as work for the investors, and an understanding of like what are the potential outcomes we're planning for, and therefore, making sure that this structure works under all of those, or where your pitfalls are.
This episode is brought to you by Satoshi Pacioli, a full-service accounting and tax firm built for the Bitcoin economy. If you run a Bitcoin business, mine Bitcoin, or invest in it, you need advisors who actually understand how this industry works. Satoshi Pacioli handles bookkeeping, financial reporting, tax compliance, and strategic planning for Bitcoin-focused companies and individuals. They speak the language of Bitcoiners and help you stay compliant while building for the long term. To learn more or book a consultation, visit satoshipacioli.com. Where do you kind of see us going? I mean, I guess this is the New Year's show that you're leading off 2026. So I think it's only appropriate at least to throw it out there to say, like, where do you see Bitcoin going specifically in like maybe like how do you see it keep coming into the TradFi world? And maybe we specifically focus on 26. It was so weird. Again, I was talking with that guy I played golf with today, Bitcoiner. It was like, man, 25. I mean, it's one of those, like, you couldn't have really put together a more bullish year in terms of news and everything that happened with the administration changeover and all of that. It feels to me like something is brewing. But obviously, I think a lot of investors, there's just a lot of an uncertainty of what's going to happen overall, be it currency debasement or macro or wars or AI or whatever. And so I'm curious to get your thoughts on how you kind of see things trending with Bitcoin, continuing to increase its foothold inside of more traditional finance circles going into 26.
Yeah, I mean, 2025, all the tailwinds, the fact that it ended up being a red year, is that's Bitcoin doing, what Bitcoin does, which is exactly the opposite of what you think it will do, sort of thing. In terms, that is to say, like, I have no idea what price will do, so God only knows there. Like, I'm not really, if anyone who listens back to any of my price predictions for 2025 should know that I don't know what I'm talking about in terms of price, because who knows. But in terms of adoption, I think it just continues, like, to be, that seems like kind of a weasel out of an answer, but I think at this point it's like I go to CFA events and meetups, or at least especially when I lived in Vancouver, I was, but I would say that, like, when I got into Bitcoin 2021, 2022, and, again, market bottom 2022, I would go to those events and wear a Bitcoin shirt and just, like, trigger people into asking me about it and get into discussion. By the way, for anyone who goes to CFA events or interacts with CFAs, just get a group of CFAs around and just ask them, what is money? Define it for me. And it's really entertaining to get into that discussion in TradFi circles, because as much as everyone deals with money and deals with, like, 9-figure deals, no one has defined it at a first principles basis, possibly ever. Like, I know it was Bitcoin that got me to do that for the first time. But to get back to your question, is I go to those meetups now, and I still try to trigger the CFAs. The new way I do it is by telling them that I'm 100% allocated to Bitcoin, and that's the lowest risk allocation you can have for a portfolio. because it's the everything ETF, right? Everything divided by 21 million. Bitcoin is the everything ETF. But I've had to shift it to that to really get them to think about it in that way, because they're no longer just hearing Bitcoin and going like, oh, that's and like they don't have the automatic FUD response that, I know in 2022 was there, even
Yeah.
just a few years later now, it's there's some interest in it. You're seeing the investment advisors and all of that. It's almost where the default now is to have some allocation there. You've heard that you guys have had the discussions in the last few weeks around how, and as we mentioned, the fiduciary responsibility is to know about it now. Like, so I think that just continues with that as you continue to have companies like Block Rewards and others starting to build ways that employers and others can use it. I think it just, sure, maybe we see some pullbacks and some like when it's hyped or not based off of narratives and other things. But I think you're starting to see where, businesses that are using it in ways that lower their costs and increase profitability. So as long as you continue to have that work and people are continuing to develop products that businesses can use to improve their business, that's what they want. And Bitcoin just continues to be a part of that. And as the tools are developed that allow it to be obfuscated more into the background and for it to be presented in a way that people are already used to, then I think it just kind of continues that that infiltration into the system.
Yeah.
I think,
I guess.
sorry, just on that, one of the biggest risks
Yeah.
is what we've seen with the samurai guys and the attacks on privacy and the attacks on ways we can use Bitcoin, where if it infiltrates in, but it's in a very regulated manner, in a very managed way, and you can't escape that, like that's one of the bigger risks I would see to like Bitcoin as overall, its use long term. So that's just with that integration. I think that it's not to say that that's all positives. Like I think there's a lot that people have to look out for there, and make sure that we're not taking short-term wins that set up for long-term pain, right? Like still have that low time preference, even as we try to develop this stuff.
Yeah. I mean, yeah, even one of the conversations. So I played golf today with a Bitcoiner and a non-Bitcoiner. But the non-Bitcoin guy has dabbled in it and made some fiat gains and gotten out. And he's kind of, he's like, oh, I'm so smart because I made $10,000 in Bitcoin and then I got out. And but it was all inside of an ETF. And one of the conversations we had towards the end was kind of like the risk of all of this Bitcoin consolidating into BlackRock's hands. That's something that I'm really trying to keep an eye out for 26, and especially with the conversations we're having with advisors. And it's a hard conversation because their whole AUM model is to keep their clients inside of something like an ETF, right? So they can keep charging on that. And so they're never going to recommend a client take full self-custody of their Bitcoin because, well, one, maybe they shouldn't do that because they've been so babied their whole life, right? That they don't actually know how to custody their own assets. But two, their advisor would always, strongly discourage that kind of behavior for their own incentive structure. So it's a tough thing. I mean, it's an uphill battle for guys like us to try to educate people. And even if they take that step to say, okay, I am going to allocate into it, specifically how they do that is also extremely important. So yeah, I think we'll keep an eye on that.
That's where the tools
Yeah.
need to continue to develop. Like I was here, like, again, this is before my time, but like, because I was class of 21, but like Seedword's BIP 39 was what, 2015, I want to say. So like before that, for the first 6 years of Bitcoin's existence, you didn't have 12 or 24 words. You had, some private, like some paper wallet with like a huge string. And so I think the continued development of the tools and that's where I'm like, we need those tools to be able to be developed in ways that also promote the permissionlessness and privacy and decentralization, and don't drive us towards that centralization. But if those tools can continue to be developed that allow people to use it in a way where, again, it just pushes some of that complexity into the background. Um, you know,
Yeah.
there are trade-offs around that, of course, but I think that's kind of the direction we go. Is it just gets easier to use so that people can use it with in it, like we see this with BitKey, right? Like they're trying to make it where you can have a version of self custody where you're not having to do the 12-word backup. And I haven't dug into it too much. I don't really have any opinions on that other than like, okay, people are doing it in different ways that might make it easier for some segment of the population. And so, now more people can actually, participate in that. And I think for companies, it's the same thing. Like we're starting to see now the tools get developed for like, you know, um, like where you could have multiple members, multiple key holders, and then swap one out because maybe you've got a couple board members and some of your senior management, and like here's your key holders for your corporation, and then one of them leaves and you need to replace them. Tools to easily allow that, where it's
Yeah.
not now a huge risk of, okay, we've got to spin up a whole new wallet and everyone's got to replace their key and we transfer all of this over here. Like you've now got, okay, we just swap out the key and we're good to go. Again, I think just continued development of those tools is what will also allow for the increased adoption at the corporate level, because as it gets easier to do, now there's less cost to the organization for implementing it. There's less risk for them. It becomes an easier thing to say yes to from a governance perspective.
Yeah. All right, man. Well, this is great. I would say if you could, okay, so if there's any kind of, CFA, really anybody, CFP, CPA, any kind of professional 3-letter person out there that's listening, I would just be curious to get your thoughts, in summary of like, what was it? Was it a good decision to jump off the TradFi world and go into Bitcoin world? Like what does that opportunity look like for you? And then lastly, maybe just, anything else that you want to mention about block rewards. If someone's interested in working with you all today, like what does that look like, especially if they're Canadian based? Are you guys up and running on that side today?
Yeah, we do have the Bitcoin savings plan operating in Canada. I'm anyone who wants to ask about anything with regard to block rewards, feel free to reach out to me. It's travis@blockrewards.com. We do have that product up and running in Canada. As I said, we're looking at launching an app in the US later this year, so that'll probably late in the year. But there will be progress and stuff coming around that. I'm actually speak to you and the team there about some of the demo stuff we've got coming and getting some eyes on it. So you may have a sneak peek there, but yeah, anyone who's interested in hearing more about that and seeing what we've got coming is welcome to reach out to me. Like I said, it's coming in the US. We do have a limited version right now in Canada, but there should be more coming there as well. Sorry, that was the block rewards piece. Oh, for anyone with a 3-letter designation, was it a good idea? Yeah, 100% great idea. Like I think you see this generally. Just again, broken. The money is broken. Everyone's living in this broken system. The amount of like nihilism and just like negative kind of thoughts on the future that I generally see from anyone who's solely focused on TradFi and how terrible inflation is and just where everything's going. And I know that was a little more my mindset too. Like I found Bitcoin part of the reason I want to work with Bitcoin companies, or wanted to, and got into this space, was they're the only times I have discussions about like 20, 30, 40 years in the future that are like positive, hopeful, and where people are looking to build something to help. It's the only none of the fiat companies I worked with were looking to like plant the tree for their, grandkids to grow up like to on sort of thing. That I've only heard that discussion in the Bitcoin space. So, like mentally, just mental health wise, I found it so much better. The volatility is easy to deal with for the positivity that you get out of just the discussions and being around people who are actually like building with hope for the future. So
I love it, man. All right, that's a great place for us to end. So, Travis, thank you seriously so much.
Sorry,
Go ahead.
one thing I wanted to throw out there, because Brian Hirschfield wrote Bitcoin for Institutions. So anyone who's got 3 letters after that, read that book. It's also not too long, but I think was a really good take on like how some of this is going to work into corporations and institutions, and even gets into some of the like deferred comp and long-term retention stuff that we're literally looking at Block Rewards. So just wanted to throw that out there as a quick recommendation for anyone
yeah, no, that's great. We'll make sure that we link that to Amazon or something in the show notes. So
solid.
Well, this is great. I learned a lot. I learned a lot about you. I learned a lot just about the entire landscape. So, and I know we're working together offline and all of that. So it's I echo what you're saying though.
Probably today. So
that sounds good, man. All right. Well, thanks so much, Travis, for coming on, and we'll talk to you soon. Okay.
All right. Thanks, man. Thanks for having me. Chat later.
Absolutely. Hey, thanks for joining us. If you want to build the future of Bitcoin and financial services, hit that subscribe button and leave us a review. You can also sign up for our newsletter and share this with someone in your network who is integrating Bitcoin into their practice or their small business. The more professionals and small business owners that we reach, the stronger the ecosystem becomes and our clients are better served. All right, stay sharp, stay sovereign, and keep leading from the front. We'll talk to you next time.